Hello friends, we are currently analyzing the balance sheet for prompting. On the screen, whatever you see are the completed use cases. The tick mark ones are the completed and the green shaded one is the current scope of the videos. So in that balance sheet, we have already completed analysis of common size balance sheet, and in this video, we will see how to do a ratio analysis. We'll be learning how to prompt for ratio analysis. Let me take a simple balance sheet. So in this balance sheet, I'll be using for prompting and a sample in this video. This is the only balance sheet which I'm attaching. No P and L statement is attached. Hence, there is a limited set of ratios which you can analyze. Anything around the current ratio, liquidity and solvency ratios you can analyze, but not the profitability ratios like return on assets, return on equity. Those kind of things you need the P and L statement, which is a separate topic altogether, where I'll be feeding a balance sheet and the income statement to do those kind of analysis. In this video, we will limit only to ratios which are pertaining to the balance sheet. So my prompt goes this way. I'm going to say that I'm a long-term investor. I want to analyze this 2-year balance sheet. Please present the results in a simple and clear manner for anyone without finance background to understand. So what are the ratios to be calculated? So liquidity ratio and solvency ratio. I give the list of ratios to calculate, and I'm telling to use a table form of representation. And on the last column, I'm asking the model to show the calculation that it used to arrive at the numbers. Why? Because if you have seen my previous video, I would have emphasized to validate whatever the model gives us output. In this case, calculation is involved, and I need to understand what numbers it has used in this calculation. Instead of me again doing the analysis by hitting the current assets and liabilities to check the current ratio, I'm asking it to show the calculation so that I can compare with the balance sheet and make sure that the results are correct. Highlight any red flags or strengths you observe. This is a very, very powerful key in any prompting for that matter. If you indicate this, the model is going to highlight you the red flags that it observes or infers. Lastly, simple language for explanation. And for this video, I'll be using Cloud model for explanation. So I'm going to attach this balance sheet and this prompt. No worries, all this prompt, I'll be updating the prompt library and I'll upload in my website soon. For the moment, focus on the procedure and output it gives in this video. So yeah, as requested, it is calculating for both the years and the numbers it is showing. For example, 2021, how it calculated. So let me compare both the okay. So current assets divided by current liabilities. Current asset is 28511. Okay, here also 28511 you have, and the total current liabilities is 267,263. So like this, you can validate the output whatever the model is giving. Sometimes it could be wrong, so it's always better to validate before you settle with the prompt for future analysis. I'm not going to show you every number by number, but I leave that to you. See, in this case, it would have reduced the 8 to 7 to, I think it has reduced the inventory, yeah, minus the inventory for quick ratio. Like that, it has calculated even the solvency ratios. Now, the most powerful thing which is going to come out is not the calculation, it is going to tell you the inferences. See, it's saying all liquidity ratios are extremely low. A healthy value should be 1, but it is only 0.11. So means, what does it mean? It is going to only cover 11% of the short-term obligations with current assets. Then it has high debt. It has immediate cash shortage, means it has very less cash to run its day-to-day business. Strengths, yes, it has some strengths. When it says it has cash has improved, you need to find out how the cash has improved. That is not part of the scope, but I'm just giving you a hint how a long-term investor should look at. And it is telling all the negativities. As a potential long-term investment, you need to understand the strategy for improving how it is going to improve its financial position and manage its debt before making an investment decision. So it's such a beautiful output that just what I gave was one balance sheet, a few ratios we calculated, and from that itself we have sufficient caution for you to decide whether you need to invest or not. Now I'm going to take a totally contrary or a better balance sheet, that is the MOIL, the belonging to the PSU pack. So earlier also I purposely took a Cloud can make mistakes. Okay, where is that? No, 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 no. MOL balance sheet is not coming. I think let me repeat the prompting using MOL balance sheet. MOIL balance sheet. It's getting uploaded, but I don't see it here. Okay, so let me check. Text extraction file failed for one of the uploaded files. Please try again. Okay, let me do it with Gemini. Let me do the same with Gemini in that case. Now Claude is saying that it has some issues. Let me do it with Gemini to see if it is able to give a output. MOL balance sheet. Yes. Let me give the prompt. You may get a slightly different format. Yeah, see, for example, it is trying to explain you what is the current ratio, those academic things. So if somebody who doesn't know anything, because we told that, right? Please keep your explanation as such somebody without a finance background. So Gemini is trying you to explain what is the current ratio, what is the quick ratio, and so on. So you have the option to even export it to the sheets, and here it is showing you the calculation, how it arrived at those numbers. Now, since I took a deliberately a different example, you can see how the inferences differs. Observations: strong liquidity, all ratios are above benchmark, low debt levels, high equity ratio. Means it is primarily funded by the shareholders fund and not by debt. This is a balance sheet. Please comment on the investment desirability based on this analysis. Oh, why it takes okay, let me again upload. Okay, in conclusion, okay, for okay, earlier I had uploaded McLeod prior to this video. So it is comparing both. McLeod, it is saying the investment disability is very low. What are the reasons? Similarly, for MOL, it is very high. What are the reasons? Friends, I deliberately pick up two extreme examples to show you how the output gives you the response. In your case, you need to put your balance sheet or your company's balance sheet and see how it works out. So with this, friends, we'll catch up in the next video where we will see on comparing the 2 years balance sheet and gathering inferences. Till then, bye. Thank you very much.